You want it? We have it. The hottest mortgage and real estate strategy broadcast in the nation. A Smarter Way Home with your host, Danielle Boote and Victor Bals. 50 years combined experience, ranked in the top 1% in the nation for home loan originations 2020. Promise to expand your knowledge, utilizing creative mortgage financing and home buying strategies. Build a bridge for a better quality of life. Get your brain cells firing for a smarter way home. And welcome to another episode of A Smarter Way Home. Modern mortgage solutions and home buying strategies for both real estate professionals and home buyers alike. My name is Victor Bals. About 21 years as a loan originator. I love the business. I eat it for breakfast, and I want to welcome my co-hostess with the mostest, Mrs. Danielle Boote.
Good morning, Victor. How are you?
I am okay. Hard time sleeping lately with the current real estate and mortgage market.
It's been a very interesting week.
Yes, it has. But today we bring some added value, and we bring a guest that's going to help us navigate through this, and also bring a specialty product or his knowledge on a specialty program that is out there that we seldom use there. So tell us about it, Danielle.
Well, it is my pleasure to introduce Eric Ensley. He is a good friend that recently joined our office. He has been a mortgage loan officer for the past 7 years. Eric's unique proposition or value proposition that he brings to the market is that he is an Army veteran. He has served 2 tours of duty in Afghanistan for our country and has a passion for the VA loan process, making it more acceptable and usable for veterans, because there's a lot of misconceptions around that program. So why don't you tell us a little bit about your story and how you got into the business.
Well, thanks for having me, and good morning. I will do a slight correction. I didn't do 2 tours in Afghanistan. I did a tour in Iraq and a tour in Afghanistan.
Okay.
That way
I
get,
apologize.
both stickers.
You
on the
jumped
truck.
out of planes,
Okay.
didn't you?
I did jump out of planes. Yeah,
Perfectly good airplanes.
It's the story told 1,000 times. Paratrooper turned mortgage banker.
Yeah,
So,
yeah. Well, we're loan officers who jump out of windows.
Good thing we're on the first floor
Or in the basement.
and the windows don't open.
Good thing we're all working from our basements in the industry. So.
So continue there. So you served some time in the military, and what'd you do there?
Well, I mean that's a show in and of itself. But the cliff notes are that I joined the Army out of high school. I was in the Michigan Army National Guard. I wanted to be a paratrooper and took the test in Lansing. The ASVAB test for your placement. And my recruiter's like, "Hey man, you don't have to join the infantry." And I'm like, "Well, you mean like I have a brain? Like I know I don't have to join the infantry, man, but I want to. Like, so call me when you have a slot in the airborne." And he's like, no, like just join up. And I was like, no, wait, call me when you have a slot in the airborne, because that's what I want to do. I'm scared of heights, so it made sense to join the paratroopers. I figured if you're joining the military, and that's kind of scary in and of itself, you might as well go the full distance there. And so I went through the training and all that. Got back home. There was a unit that was deploying shortly after I got back home, and I volunteered to go on that trip with them. So that was 2008. We were in Ramadi, Iraq, which in 2007 was a huge hotspot. There was a huge push. If you've ever seen American Sniper, Chris Kyle, that was Ramadi 2007. So we were at the end of 2007 and going to Ramadi thinking, this is going to get real serious. And it really wasn't. By the time we got in country, we saw some stuff, vehicle-borne explosives and things like that, don't get me wrong, it's serious, but it wasn't daily gunfight kind of situations. So rocket attacks, a couple minor things, but nothing like we had imagined. It was pretty calm for the most part. My Afghanistan deployment was a lot different. I'd started in a long-range surveillance unit, which is small teams. It's a reconnaissance outfit. You're the idea is that you're, in conventional warfare, drop behind enemy lines, gathering intelligence without being seen, and then getting out of there. Typically, in 2012, we moved over, a whole bunch of us from the reconnaissance unit that I was with. We moved over to a dismounted reconnaissance troop, and we went over to Afghanistan we were in the Kandahar province, which is the birthplace of the Taliban, and we were landowners there, which means we were the operational unit. We had a combat outpost that we manned, which is basically 12 to 20 guys in Indian country and all by yourself. So, your fuel for your trucks comes through, helicopter drop off and things like that. Your food comes through, convoys come truck it to you, and then they say, all right, well, this was great. See you later.
And you're like, you were on an island, out in the desert.
Yeah. And we had a successful mission there. But it was not a slow deployment by any stretch of the imagination. We had a lot of gunfights, had some IED activity. We had 11 Purple Hearts in my platoon.
Wow.
Everybody made it home alive, which was ultimately for as a leader, I ran a team. And given my Iraq experience where I saw the fruits of our efforts, so to speak, it was we're not changing the world here. So, and I figured going into Afghanistan, that would be the same thing. It's like, I don't so much care about the mission. I'm focused on
survival.
Bring your guys home, and call it a win. And I knew too, that was my last push. I'd gotten married in August and I'd gotten married in July and left in August. So my first year of marriage was a deployment. My wife was she was in her last year of grad school, and her husband was deployed and getting in gunfights. So you want to talk about somebody who's got some intestinal fortitude, you should meet my wife. She's a strong lady.
So let's fast forward a little bit, because we've had a conversation here. And when you got out, you went and bought a home, and you bought it with the VA benefits there. And the story kind of unfolds there. Tell me what happened.
So
there.
what actually happened, I wasn't out, I was still in. This was 12 years ago. So I had just come home from Iraq and was buying my first home. And if you're unfamiliar with the VA loan, or for those that are unfamiliar with the VA loan, it's a zero-down loan program with no mortgage insurance. The interest rates on VA loans are typically better than conventional. And if you have a rating with the VA, a disability rating of anything, which more than 25% of the veterans in Michigan have a rating with the VA. It's super, super common, right? It could be anything. Like, I have a rating for the ringing in my ears, tinnitus, called the VA about the ringing in my ears. It's still ringing. So you have that, and then that waives the funding fee that's associated with the VA loan. So if you have that rating with the VA, then if you're buying a home, there is no scenario where mathematically the VA loan is not the best financial option for you. And when I bought a house, the lender that I met with, who my realtor had set me up with, she said, don't use your VA loan. Save that benefit for your big boy house. And I'm like, okay, I don't. Mm-hmm. What do I know, right? Like, I'm an infantry guy, not a
jump
mortgage
out of
banker.
airplanes.
Like, I carry a gun, and that's my main focus. I'm not worried about you
just wanted a house.
I didn't know what an APR was. I didn't, you know what I mean? Like, it's just, so veterans in general, we don't have a good perception of, or a solid understanding of what our benefits are. And so I just, trusted the professional and went the route that I was told to go. So I ended up buying a house on FHA, which I had good credit. Job, employment might have been questionable because I was still in the Guard and just coming back from deployment, needed to find a full-time civilian job, all that, or had found one, but it was new. So I can understand that it wasn't the easiest situation, but looking back now as a loan officer, VA was absolutely the right way to go. And I realized that a few years after I had owned the home, where again, I bought on FHA. So I had a funding fee I shouldn't have paid. That's thousands of dollars. I had mortgage insurance that I paid for years that, that adds up too. When I think I was 22 when I bought the house, like 22-year-old kid isn't making a ton of money.
That could hurt.
It can hurt. Right. So, I'm not I'm not mad, but I'm a little bitter about that whole experience. But it did move me into, into what I'm doing now. Long story short, right? Like I have a passion for helping people with their personal finances. I knew I wanted to do that in some capacity. I wasn't sure what it was, and I'm a big big Dave Ramsey guy. I don't agree with everything he's got, but I listened to his show. He talked about Churchill Mortgage. That brought me into the lending space just to start with. So I sought out that company, sent them a resume. They didn't call me back. I called the branch manager that was in Michigan. He didn't call me back. So I applied for a loan and they called me. And that's how I got the job.
Yeah, that's usually how it works.
Yeah. Turns out I did have something they wanted. It was my business. So that's what got me into lending. Is I finished up college when I got out of the service and started there 7 years ago. Was there for a few years, and time marches on. Now I'm here, but I've built a career out of helping veterans with their VA loan. And what we're trying to do, I'm a part owner of a company we started called the Veteran Lending Council. We train loan officers around the country about VA loans. We built a course. It's an online course, and we do a couple live events every year. We have one coming up in Dallas in November, and our primary focus is training loan officers about VA loans and helping them join our mission to change the perception of VA loans. Because what happens is, lenders across the country, they can all write VA loans for the most part, but if they don't exercise that often enough, it's a different animal. It's not it's not hard. It's just guidelines are perishable skills. So if you don't do it often enough, you're not going to be good at it.
Right, there's different forms that go along with it, and in our current world, the computer just goes, here's your VA package, right? So it's easier. But years ago, and I'll hate to say how long I've been in the business, but years ago when
I assumed he was in for 45 and you were for 5, because you said combined 50.
Just because I look,
right?
No, I'm only 21 years.
Yeah, I'm 33 in. I hate to say, but I was a teenager when I started. Yeah. Got to hang on.
You
to
were
that.
6 when you started.
I got to hang on to that as long as I can. Back in the day, we would actually have to submit the loan to VA in Detroit, a package. It was good old fashioned. Here, the file had to go to VA, which was definitely very complicated and took a lot longer. Fast forward 30 years, VA has come a pretty substantial way forward with technology.
Sure.
And we don't send anything to VA, but there are still people out there, sometimes sellers, that go, well, I'm not going to do a VA loan. I remember this from 1992.
Right.
Or realtors that even could be around that long that have a bad perception of the program and what it takes.
Let's dig into that, because with the current rate environment, with interest rates going up, we're starting to see more government loans come into play.
Including VA.
But yet it's that perception that a conventional loan is better than a VA loan when our sellers or maybe our listing agents are presenting their offers. What is the best way to explain to our realtor professionals of how to present a VA offer that it is probably the best thing since sliced bread?
Right. Well, the most efficient way that I've been able to articulate that still takes 2 hours.
Yeah, that's a class.
So but that's it. It's an education game. We need to make sure that lenders are educated and that real estate agents are educated so that we collectively can do right by our clients. Because if you're not taking the VA offer and it's the highest and best offer, but it's VA, and so you don't think it's the best, and you're advising, hey, it's VA, it's going to have these issues, and you're wrong, you have an education problem, and you're perpetuating the myths that are out there, right? Okay. So what we do is we try and educate, things like what you just talked about, right? Like, does the VA take longer to close? It absolutely shouldn't, right? But unfortunately, nationwide, the stats last year are that VA did take 4.5 days longer than conventional. Prior years, it was actually neck and neck. It was a half day apart in 2019 and 2020. 2021 stats aren't as good.
Would you think that was because of the refi boom?
I would think it's because of who was doing the refis for sure.
Ah, okay. Yep.
Because
that makes sense.
there's a lot of lenders in that space that they don't do a great job. They're good at marketing. They're good at getting veterans to think that's who I need to call. And they're nationwide companies and they do a ton of business. But it's not because they're great at VA loans. It's because they're great at marketing, right? And they can pay for Super Bowl ads, and they can, what happens when you join the military is you sign up and they're like, hey, welcome to the Army. You're going to get a paycheck. It's got to go direct deposit into one of these 3 banks. One of those, obviously, does a lot of VA loans because I've had an account with them since I was 18.
Yeah, you're a captive audience.
Right. I bank with them, so I'm going to call them for my mortgage. And it's like, that's the wrong answer because they do a terrible job. They're good at marketing. They've got good market penetration because they're already in half of the eggs in your financial basket happen to be with them, including your auto insurance because that's how they started. But they're an auto insurance company. You shouldn't be getting your mortgage through them. They train people on, they train their loan officers, and I use that term.
They're not really loan officers. They're phone jockeys.
Right?
Yeah.
They're the headset jockeys that they might be trained at sales, but they're not trained at actual guidelines. So what happens is they pre-approve somebody, and they didn't ask the right questions because again they're not guideline experts. They're salespeople that want to push you to the next level, and then deals fall apart, and the VA gets blamed, and it's not anything to do with the VA.
Okay.
Right. It's who started it. Well, do you remember, I believe this was your loan, probably about 5 years ago.
Yikes.
You did a loan for a Navy admiral, I think, very high up Navy officer that was on the verge of retiring and moving his family to Michigan. And at the time, he was buying what was considered jumbo loan territory. And he went through one of those government agencies.
3 of them.
For a mortgage. He went to 3 of them? Yeah, okay.
Well, they're not government agencies.
Well,
Let's be very clear about
government
that.
endorsed,
Focused.
yeah.
They market themselves like they're an arm of the VA, and they have
But
nothing
they
to do
told
with them.
him, if I'm correct, you remember this deal,
Yes.
right? They told him he could not buy a house in that price range with a VA loan.
They told him, so that was back when I think the conforming limit was 424, and he was buying for simple math.
$750,
Yeah,
something like that.
It was whatever it was. They told him he needed the entire spread there. So if the conforming limit was 424 and he was buying for 624, let's say, they told him he needed $200,000, and
to use his VA benefits.
right.
Yeah.
And the truth, like, that's incorrect. That's totally incorrect. You don't need to cover that.
But this is one of these big outfits that
Yes.
do VA
Yeah.
loans all
Yep.
day long.
All day
It's-
long.
One of the it is, if not the number one VA loan producer in the country.
So these are fast food phone jockeys on the phone.
Yeah,
Yeah.
telling this guy that he needs $200,000 when in actuality he needed $50,000 because that's how the
Back
VA,
then, that's how it worked.
You had
Yeah.
to cover you had to replace the coverage of what the VA loan benefit is, which is 25% of the loan amount is guaranteed to the lender. Right, so that's why you don't need mortgage insurance is because you have a VA guarantee, as that the lender is always going to recoup any loss from if a veteran were to default, they would recoup a loss if they sold the home for less than they were owed, up to 25%. So when it went beyond that conforming limit, then you have to replace that with 25%.
So he went through 3 different large national companies and was given the wrong information 3 times.
Right.
Then someone finally referred him to you. You were able to go, nope, here's what your options are. And I think you closed it relatively quickly.
And the other thing that I like to bring up on that for that guy in particular is the funding fee.
Yeah.
Because he was in Iraq when I was talking to him, and he's like, we're buying, I'm going to buy in Michigan. I'm retiring as soon as I get home. My wife's going to move to Michigan prior to me getting out. And then, and so I asked him, I said, sir, have you put in a claim for disability? He said, no, as soon as I come home, I'll do that. And I said, that's the wrong answer. And here's why. Because remember, going back to the disability, if you have a rating with the VA, which again, the guy's 30 years in the military. He's going to have something that he's presumably going to claim. That's just kind of part of the process. And so I said, you have to file this claim before you close on the home, because you're going to pay a funding fee that at the time on the home he was buying was somewhere around $18,000, which is no small thing, right? So he filed a claim while he was on deployment rather than waiting until he was home. And the timing of that, if you file your claim before you close on the home, and then later on the VA gives you something that backdates to when you filed that claim, which is before he closed on the home, it will retroactively refund your funding fee.
Oh, that's
So
cool.
you got it back for him.
So it was an $18,000 piece of advice
question.
I gave him.
So a question. So if one was to file a claim to be at least 10% disabled or whatever, how long does that generally take to get approved?
That's a super sticky question, because there are people that it's years, depending on because you're dealing with generational differences. Like there are Vietnam veterans that I'll talk to and say, you need to go, you need to go get what you're owed, right?
Yeah.
And there's pride stuff that goes involved with that. So if you're a Vietnam guy that's putting in a claim for something that happened in 1969. That's going to probably take a while to find the right paperwork, right, for the government to go through all that. So that might take them years, but it could also be as soon as a couple months. But what I've advised people to do is, I've got a guy right now that is under contract, and I went through that. He was pre-approved with another lender, went under contract with another lender, and then jumped over to me. And on that first conversation, I said, "Have you put in have you made a claim for disability, or is that something that you might do?" Because that's what we run into a lot with guys my generation is they just haven't gotten around to it, right? They might have arthritis or shot knees or whatever, and they're eventually going to claim something. But right now they're dealing with young kids and starting new careers and just trying to transition out, right? Okay. So. Again, if it's one of those like he was, he's like, yeah, I just haven't gotten around to it. I'm like, all right, well, at a minimum, put in an intent to file with the VA. Okay. If you put in an intent to file, you have 12 months to get your claim in. So if you're about to buy a house and then you talk to me and you're like, oh shoot, I should have put in a claim.
So we want that predated. You started action.
Put that intent to file in, and that might save you a few $1,000 down the road.
You talked about newly employed, so coming out of the military. I've heard stories or myths that says, oh, if you come out of the military and you're infantry and you just start a job, that's a totally different career. Okay? Do you have to be employed a certain amount of time? How does that work when you exit the military to be eligible for that loan with your type of career?
Here's what's awesome about the VA. The VA's guidelines are gray in a lot of areas. Okay. Right? Most loan programs are very black and white. The VA it leaves a lot of gray area. It doesn't as often tell you what you can do, but it will tell you what you can't do. So sometimes you look at something and you're like, well, it doesn't say I can do that, but it also doesn't say you can't. So therefore, if it makes sense, and it's right in the VA guidelines, it'll tell you as long as the lender properly documents their decision making, the VA is unlikely to question their judgment. Right? Okay, that's the reality.
So is this up to the loan officer to potentially build a sensible case for the underwriter to review?
That's it. We as loan officers are effectively the lawyer making the case to the underwriter, the judge, right?
Okay.
So if I can justify something and it passes the sniff test, the VA is unlikely to question the decision maker. If and again, going back to kind of how I don't want to confuse how that works. The underwriters, 99% of lenders in the country have direct underwriting authority, meaning we have the stamp of approval from the VA. That loan does not go to the VA for approval in order for us to close on that loan. It does go to the VA for approval after to get that guarantee, but that's something the veteran doesn't even know about. Something everybody already got paid. They own the home.
They got the keys.
It's done, right? That's a done deal. 99% of the time, 99.99% of the time. There are a couple scenarios that still go to the VA. There's only two actually, and it's for joint loans where you have a veteran like myself using the VA loan, but with a co-borrower that is not my spouse. Okay, and it's also not a veteran. It's a joint loan that would still go to the VA for underwriting approval. But that can
be done?
Yeah, it can be done. It changes the parameters. It's no longer a 0 down loan. Now it ends up being like a 14% down loan, because basically what happens is the VA cuts your benefit in half, and there's a little squishy math that gets involved with the how that down payment gets calculated. But we're gonna get deep in the weeds.
Okay.
But the bottom line is it's doable. It's uncommon. Most of the time somebody's buying a house with a non-veteran co-borrower, they don't typically want to put that kind of money down, so they end up going with a different loan program. But yes, it can be done.
Another question I get a lot of times is a veteran is a vet, and he was married, and the vet dies. Is the wife eligible to use VA benefits to buy a home?
Sometimes.
Sometimes.
It depends. And again, it gets, so here's, you hopefully that veteran spouse, that surviving spouse, is working with the right lender who, one, identifies that there was a spouse who had that benefit, because a lot of times the surviving spouse won't remember or won't think to offer that up, right? They're not the one that earned the benefit, so they don't ask about it. But if you have a surviving spouse who is surviving a killed in combat scenario, absolutely, 100% of the time they're going to have that. If they get remarried, they lose it. But if they're unmarried, they would retain that. If they get married and then they hit the age 57 and a half or something, they get that back, which doesn't make any sense. But that's a VA rule. I'm not really sure why. So the surviving spouse can lose the benefit and get it back. But it's not just for those that were killed in action. It's also if a veteran died of a service-connected disability. So going back to the rating thing, if somebody, let's use Vietnam for example, if a soldier dies of cancer from Agent Orange, that surviving spouse will have that benefit. If that veteran gets hit by a truck and dies, the spouse will not have that veteran. So it's not a guarantee, right? You got to know the whole story. But I can tell you that that benefit. I had one earlier this year. It was a surviving spouse of a soldier who had. He was a guy. This one hit me in the feels. It was a guy like me, infantry guy, multiple deployments, 2-year-old kid. I've got a 2-year-old kid. Battled with PTSD and took his own life. The VA has changed their stance on that, and they now allow for that spouse to keep that benefit.
Wow, I hadn't heard that.
So I was able to help her move from New York to Florida and restart her life. This was a fresh wound. And she was able to restart her life, buy a home in Florida, get that security of having a place to live with a 0 down loan program with a better, lower payment than any other loan program would have offered. Right. So it's a huge deal, that one meant a ton to me. Okay. So anyway, but going back to, the perception in the marketplace and overcoming objections and things like that. That's most of the time, what I train real estate agents to do, and what I would do as a loan officer and train loan officers to do, is to actively get involved at the level at the front end. If that offer goes out, any loan program you should be doing this, but you should be calling that listing agent and asking those questions, right? And building rapport. Have you dealt with VA before? Do you have veterans in your family? Oh, that's awesome. Let's have a little backstory there. Do you have any concerns about VA? Because people have concerns, whether warranted or not. And if I don't ask the question, I won't know what they are. So if it's a timing issue, I'm happy to talk about that. Yeah, the averages right now show that the VA takes a little longer nationwide, but that's averages, right? Between me and Tom Brady, we average 3.5 Super Bowl rings apiece, but I don't get hired based on averages because I'm no good at football, right? The averages don't matter. And if you're working with a good lender, the average is irrelevant, right? We just had a VA loan that we rescued from another lender. They had it for 2 months, couldn't close it, and we were clear to close in 6 days. Yeah. Right.
Yeah,
so
that was a great success story.
Who you work with in this matters a lot. So that's always on my first call is like, look, I don't need additional time because there's no difference in the process for me for conventional and VA. They're going to go the same underwriting team. They're going to have the same file flow and everything. So there's no reason VA should be taking longer.
Well, it's the traffic cop behind it, the loan officer that builds the case, gets it through, and it's well documented, and slam it through.
It's the operation of the whole company, right? And some companies might only have one designated VA underwriter, where they've got 10 underwriters, but only one is VA, and maybe they're busy at the minute, so they do have a timing issue, right? And so it does make a difference what kind of company you're working with. So timing is one thing that's always a concern.
The VA inspection.
Yeah, and that's
the appraisal inspection. They're going to do health and safety. Could you elaborate on that a bit?
Yeah, so there is no VA inspection per se. There is a VA appraisal, and the appraiser is an appraiser, right? Their primary focus is to get out there and get the value of that home, right? To protect the lender and to protect the borrower, right? I don't want to lend more on a house than it's worth, and you don't want to borrow more than it's worth, right? And be immediately underwater. So that's there for a good purpose. But while they're there, they're also supposed to be looking out for health and safety concerns, right? So, agents get over the top on property conditions. They're like, I don't think this will go VA. And I'm like, well, why? It's like, well, it's it doesn't have carpet in this room. They painted the floor. Well, is it a health and safety concern? Well, no. Well, I don't see an issue there. So let's give it a whirl, right? And if we're wrong and the appraiser does have a God complex and calls something out, there are outlets for that, right? You could close with an escrow for repairs on VA. People think you can't for some reason. You can, you can go to
regardless
the VA,
of weather-related conditions on any item.
Well, it's company dependent, right?
Okay.
So companies make their own
overlays.
Stances on that,
Okay.
and understandably so, right? If you close with an escrow for a repair and the client never does the repair, like the lender assumes some risk there, so they don't have to do that. It's convenient for me as a loan officer to be able to say, yeah, my company will do that, but it's them taking on an extra risk.
Well, the general repairs we get, especially at this time of year, is roofs, cracked and peeling paint,
outdoor paint for sure. Yeah. But I mean. Yeah, right now is a great example, right? It's cold. It's not a good time to paint your house. We'd close with an escrow for repair for sure. So don't let that be a reason that you're not going to sell that house to this veteran, right? But I try not to get too far into the weeds on that. But what I do want to do is make sure people understand they're not making sure your house is pretty. They're not looking at cosmetic things. They're not looking at code. Like these are not building inspectors. They're appraisers. That's their primary focus. But if they see that you've got, wires hanging down from the ceiling that are hot, they should call that out, right? If you have a falling down, barn, then they can call that out. But there are solutions for it
because
too.
even on a conventional appraisals where it's not required to do a health and safety inspection, I've had them come back with loose and hanging wire or something. Something wrong with the structure of the garage and the rafters weren't looking right. I thought, interesting.
Right. So I mean, the easy question to ask is there anything with this property that you're selling that you think is a health and safety concern? Because who's selling a house that they want to say, I think there's a health and safety concern, right? Like, in my opinion, if you're selling your house, like, wouldn't you have buttoned all that stuff up? And if you're an agent selling a house, wouldn't you have advised your clients of what needed to be taken care of?
Cap off those hot wires
so
in
that
the
you
ceiling.
can market to everybody.
Well, here's what I see is they'll put a listing on the MLS and it says we're accepting conventional, cash, VA, FHA, or rural development. But yet when they take an offer on, they're going for the conventional offers, And do you have let's call it a cheat sheet or something, the benefits of a VA offer to assist these realtors at all?
Yeah, I mean, we've got all sorts of handouts and things like that. But they're called throwaways for a reason, right? People throw them away. But what I like to do is, especially when I'm teaching my Con Ed classes for these agents, is for them I'm getting out there trying to change their perception of the VA. There's not a reason you should be scared of it, for sure. But more importantly, in my opinion, they should be looking at it as an opportunity, right? Because if you're missing opportunities because of what you don't know, for example, you're selling a condo and you looked up and saw that it's not on the FHA approved list. So you just said cash and conventional. Well, FHA is not VA. that might be on the VA approved list, right? So you might be missing an opportunity. You might be missing the opportunity to sell to these Vietnam veteran, era guys that no longer can maintain their property or don't want to, right? Or whatever the case may be. So you're missing a whole demographic because you're only saying cash and conventional. And some of these veterans are smart enough to know, surrounding this benefit, that I'm absolutely going to use the VA loan, right? And so if let's say it's cash and conventional, I'm not doing it. So you're missing opportunities there. You're missing opportunities on luxury properties for sure.
Oh, yeah.
You see that all the time where they're like, oh, well, conforming limit is
Well,
642
let's go
and I'm
back
selling
to that.
for $1 million. So
Back to that deal you just closed a week ago or something like that. What was the purchase price on that thing?
1.6 million.
1.6 million, and that was a zero down deal, right? Most would think you can't do that.
Right. Well, and think about it too from a if you're, again, going back to, I want to be able to sell, I want this to be able to market to as many people as possible, right? If I'm ruling out the veteran's the easiest person to qualify for that house, right? Because if you're waiting on somebody who's saving up 20% of 1.6 million, that's going to take them a minute, right?
Yeah.
Or, again, going back to the gray area on the guidelines of VA, VA has, debt to income ratios that are recommendations, not hard stops. So in an area like, in like high cost areas like that, where you're not able to find super cheap housing, can you push beyond, where you've got one conventional guy who's capped and says, I have to come up with this amount of down payment. Otherwise I can't qualify for the loan because my debt to income ratio doesn't fit. VA, you don't have that same problem because you have the flexibility as long as you can justify why, right? So you could get, I've seen 70% debt to income ratio get approved. Yeah. And it sounds like I'm setting somebody up to fail there, but it's not. It might be that it makes total sense because you have a spouse who has an income but bad credit. So she's not on the loan or he's not on the loan, but we know the whole picture, right?
So now,
you can never do that on another loan program.
Go back to that. So, because we have those situations all the time where we have a buyer and the spouse is not on there because of credit, but there's income. So that's a compensating factor that the VA will look at. And if we build that case to the underwriters, they should look at that with merit.
Yeah, absolutely.
Okay.
I mean, they look at your payment histories on things, your reserves, you got money in the bank.
Residual income, because I know the high debt to income ratios, a lot has to do with the residual income. What is left over? Is that where that spouse's money would be considered?
No, that's where you're looking at what the residual income is looking at the reality of life. Right?
Okay.
And the VA has the lowest default rate. It's got the best performance out of all loan programs. And what I would attribute that mostly to is that the VA looks at loans differently. They look at your residual income, which is saying not just your income versus your debt, like every other loan program. It's your income versus your debt plus life costs, right?
Utilities.
So the cost of, you've got 3 kids, that has bearing. So they're measuring all of this to make sure you fit. So they look at everything that, what you've got coming in versus what you're going to have going out in total, not just your obligations of your debt payments, but your total life cost, right? And so if you've got a number that works there, the debt to income ratio doesn't matter. So particularly on high cost, high priced homes, that's where you're really going to see that they meet residual, even though it's a high debt to income ratio. It's because somebody making $20,000 a month with $15,000 of monthly costs still has $5,000 left over. Where somebody making $2,000 a month with $1,500, they have $500 left over, right?
Right. You don't buy a lot of groceries with $500.
Exactly. I mean, that's extreme, and obviously,
but a good example.
You get my point. So they do look at the actuality of life, and that I think that's a huge part of why VA performs well. But the other thing too that I like to make sure I hammer home with everybody is just because the VA has all of this flexibility, it sounds like you could make the argument like, oh well, it sounds like people that really shouldn't qualify are buying homes, and to a degree. Well, I wouldn't say that's true, but I could understand the argument there, right? Somebody might qualify on VA where they wouldn't on other loan programs. That is true. And that's a benefit that they've earned, is that the VA is going to guarantee them. as long as we can justify our reasoning for giving the loan. We're not just handing out money. But that's not the norm, right? That's not the norm at all. On average, when you look at the stats of the average VA buyer, it's a 726 credit score. It's money in the bank. It's low debt to income ratios. It's when you compare an FHA buyer versus a VA buyer, the FHA buyer makes about $40,000 less household income as the last year's stats. I mean, that's no small thing. So when you see these agents who were scared of VA because they just don't deal with it, but they've dealt with FHA enough that they're like, yeah, I have no problem with FHA. It's like, so if you list a home going and you're marketing to FHA, you're marketing to lower income than VA, lower credit,
and a higher default rate. With
lower
the
credit,
FHA.
by a long shot.
Yeah.
Right. But it's the concern for a listing agent is more of can this close, right? And so that they have more experience with FHA because FHA there are more FHA loans, right? There are only 5% of the population are veterans, so they just don't see it a lot. But the reality is, if the average veteran home buyer was purchasing a home and didn't have the VA loan, they would absolutely be conventional buyers, right? Yeah. It's they've earned a benefit, so why would they not use it?
Well, it's almost like it's like they shouldn't be allowed to put financing type on a purchase agreement. We've got an approved buyer. What does it matter to you? What type of financing, in a sense?
Well, there's some truth to that, but
there are property condition concerns that are super valid, right?
Yeah, right.
And again, I don't fault people for having concerns initially with VA because again, you got lenders in the space that do such a bad job that I would be concerned.
Well,
right?
one of the things that
there's lenders in the conventional space that are the same. So
one of the things that I've noticed, even in our area, for instance, is that there are more VA appraisers out there. VA has done, I think, a good job of, recruiting more appraisers, training more appraisers. So we don't have the same issues we did 10 or 15 years ago, where, for instance, in Livingston County, where we are, there used to be 2 people.
Right.
Now we have a lot more available appraisers, so we can get an appraisal back in a few days instead of a few weeks.
Right.
But there's a lot of other unique features of the VA loan program. One of the best success stories in my career with the VA loan was, I think it was about 6 or 7 years ago. I had a gentleman that was a Vietnam veteran. Him and his wife were retired. He was fully disabled. And they were downsizing. So they were selling wherever their house was. Gosh, I don't even remember where it was, but it was like south of Ann Arbor, close to the Ohio border, kind of in the rural area. And they were buying a Emily Mitchell new build house. And the house had already been started, but it needed modifications for the veteran because of his disability. Like he was in a motorized wheelchair. And what he was able to do through this process is we submitted documentation to the VA to show what we needed to do. The builder was willing to work with him, and he got a $75,000 disability grant.
No kidding.
No kidding. So they, the builder made not huge modifications, but minor. The bathrooms were fully accessible. They put an emergency exit door with ramping out the bedroom, for instance, to provide for this gentleman. And he was able to utilize that money, towards the purchase of the home and the cost of the upgrades that he needed to be as comfortable as possible.
And I think now those numbers, they can go up to like $125,000
really?
Or something like that.
And
how does one apply for this grant when needed, when you're putting in an offer? How long does that take to go through?
So I try and stay in my lane. And so on that kind of thing, what I would do is point you to a veteran service organization that can assist you with the process. Same with like filing a claim. Like I wouldn't file my own claim. I wouldn't tell you how to file yours, but I would point you in the direction of a veteran service officer who could help you with that.
Well, going back to Danielle's thing there, so you went under contract, and when did these items come up? Is this at the beginning of the build?
Yeah, I think the veteran knew about it.
Okay.
So he brought it to us. And to be honest with you, I don't remember all the minute details of what we did, but I do remember being involved with it. So there was a veterans, but whoever we dealt with was somebody that was employed by the VA. So they assigned this veteran like an advocate,
Caseworker or
a
something.
caseworker. And then the caseworker and I worked on whatever the paperwork is, mortgage related, that we needed. But this was a veteran that already had his disability claim in, received his medical care from VA. So he was well entrenched already with the VA process. And because it was a new build, we had a little bit of time. But it worked out.
Yeah,
And,
that's awesome.
it was the amount of time, because Jay was involved. Remember our buddy
back.
Jay? He was involved with it. So I kept him along, up to date on the situation. And he was like, Danielle, I've never seen anybody pull that off so fast. And I'm like, well, by the grace of God, we did. But you know what? That veteran, I still keep in touch with him. He calls once or twice a year to say hello. In fact, maybe I'll call him today and
There you go.
see if he's doing okay. But, there's so many opportunities. And my father-in-law was a Korean War veteran. And the mindset that he had, now he was on an aircraft carrier when he was 18 years old. He had hearing damage his whole life. He never, ever once applied for any VA benefits. And I've been telling my husband for 10 years, I said, you got to help Dad get to the VA. And he said, no, I'm fine. I don't need it. It's for somebody else. But you know what? In his elderly years, he needed hearing aids. He needed a lot of things that the VA would have helped with. And unfortunately, my father-in-law passed away earlier this year. And I've been working since January to do a claim for aid and attendance, right? So we started the paperwork. Dad passed away. I redid the paperwork. So now I'm working with VA to help my mother-in-law. And nobody, I knew about aid and attendance because of my grandmother got it from my grandfather, who was a World War II veteran. But there's so many benefits out there that if you're listening to this podcast and you have a family member, a friend, encourage them to go to the VA, not just for a mortgage. Even if you don't need a mortgage, the VA is there to help. What veterans' experiences were 25 or 30 years ago with VA are very different than what they are today. And regardless of your age, regardless of when you served.
I think, there's a lot of pride associated with the delays of people seeking things out. Like I struggled with the same thing, where it was like, why do I need to put in a disability? I'm not disabled. I'm fine. Right. But there's a toll that you put your body through and that you put your mind through when you go to war, and you don't come back the same. But the amount of the best counter to that I've run into is a guy, he was a Vietnam guy, told me, he said, look, I understand your thought there, but here's you're not spending money that should be going to somebody else. If you don't have your claim in, then that's in theory not a part of the budget next year. So you're actually hurting the overall VA budget by not being a part of that, which I was like, yeah, that's fine. Like, reduce spending. I'm cool with that. But he's like, well, here's the bigger problem. We've got, politicians in Washington that need to see the real cost of war, because they might be less likely to jump into the next one if they see the true cost. So if you're bearing the brunt of an issue and not getting the government to pay out for what they caused you, you're doing a disservice to the next guy on the next war, who gets sent over there for whatever reason, and the politicians aren't weighing the true cost. So when you put it that way, I was like, well, that makes a lot of sense. Right?
Yeah,
Well,
that really does make sense.
And one of the other benefits to veterans in the state of Michigan, let's talk about property taxes. Okay. In the state of Michigan, if you are
100%
permanent and total disability, you will not pay property taxes on your primary residence.
Right. Or with a 70% rating that gets paid as unemployable. If the VA says you are rated as unemployable, you might not have a 100% rating, but you're going to get paid like you're 100%. And in the state of Michigan, you would be exempt from taxes if you have that unemployability waiver as well.
Which that's another huge benefit.
I've dealt with, I had a guy in Royal Oak that, it was a $700,000 house or something like that. And he'd been there since the 80s, and he was moving to Florida. He'd had his rating since the 80s. he didn't know he wasn't supposed to be paying property taxes.
Oh,
for
Can
the
he get
last-
that retroactive?
No.
No, but you're talking about hundreds of thousands of dollars this guy spent in taxes.
We'll talk on those taxes now. Is it true that if you qualify for not paying property taxes, that you have to file paperwork with the township each year or
Each
the
and every year. That's right.
municipality?
Yeah, you have to file that exemption. And I don't know why that's the case in Michigan, that you have to do it every year, but you do. So don't forget that if you're in that.
Yeah. Okay. Now, also the other question: can that be set up at closing that they're not going to pay property taxes, so they don't collect escrows? Can they file any pre-paperwork with a purchase agreement?
Depends on the company you're working with.
Okay. So that's a
will
company
allow for
overlay.
that. Yep. Some will allow for that and some won't. And the reason that, for those that won't, I understand why, right? If you're a nationwide company and every state has different rules, maybe you don't want to risk that you're screwing up one of the state's rules, so you just default to the most conservative approach, which is we've got the money for taxes. If they don't need it, they'll get it back later. I don't like that, but I get it. But yeah, even though you haven't technically filed for your exemption yet because you don't own the property yet, you can.
But
companies can set it up that
The
way.
argument that way is a current home is non-homesteaded. And when we buy the home, well, what's to prove that they're going to file homesteaded? We make that assumption.
I 100% agree.
Right.
But again, I think, when you look at companies that are in multiple states and they don't want to,
Okay.
Because Michigan is unique in, kind of unique. There's only, I think, 17 states or something like that you're totally tax exempt if you have that 100% rating. But there are other states that, every state does it differently for the most part. There's some states that are, a prorated amount where it's like if you have a 50% rating with the VA, they waive 50% of your taxes. So there's a lot of nuance to it, and I understand why they just don't want to screw around with it.
I'm sorry, this leads me down another rabbit hole, but let's go back to the veteran and the spouse. And the veteran dies because of the cancer or something like
If
that.
he was exempt, that'll carry through.
That'll carry through as well. Okay.
Yeah. And the other, going back to, like we're talking about the benefits, and for veterans, they need to hear that, and that's a good thing. But it, I like, most of my focus is if I can teach loan officers and they can teach realtors and realtors can teach veterans, we're going to have a bigger impact, right? So what I talk about, and want to go through these myths is, like we talked about appraisals, we talk about property inspection, like that's not a big concern. Talk about values, like the numbers on values. When you look at the VA's opportunities or the VA's total, nationwide averages, it's the same as conventional as far as at value versus below.
No, the agents need to know their property values and know their comparables.
It's the same.
At least with a VA loan, we can, for instance, if the appraiser institutes something called Tidewater, the appraiser then comes to the real estate professionals involved in the transaction and says, I have a concern or I'm having a problem finding comps. Can you help me? And then the parties will communicate and work together. I had a Tidewater just in the last month or two. And guess what? That appraisal ended up coming in over sales price.
Right.
That appraiser just said, hey, I need a hand. What you got?
Right. It's so funny because, again, if you didn't deal with VA since 1995, I understand why you might have a bad perception of it. But right now, when the improvements that have been made, when I hear people that have complaints about the appraisal process or concerns that it's going to come in low, it's like, it's just not warranted. Like, find another loan program that has two opportunities for you to impact the value, right? Like what you just described.
Yeah.
That's an awesome thing, Tidewater, where the appraiser is reaching out for help. You won't get that
Yeah,
on other
you
loan
won't.
programs. Before you have a low appraisal, they're reaching out for help. And so, in my experience, half the time I get, Tidewater, and we help, and then we get the value we need.
Right.
Great, we're moving on. I'm glad we had that
Well, we get the
opportunity.
supporting evidence to either raise the value or say this is actually undervalue or overvalue.
But it even, there's another opportunity after that where you could request a reconsideration of value from the VA, where the appraiser said, this home that's under contract for $300 is only worth $280. And you can go to the VA and go to their staff appraisal reviewers who can go over the head of the appraiser who did your appraisal, who, it's worth mentioning, is not an employee of the VA. They're able to do VA loans, but they're not an employee of the VA. So I like to be kind of careful with the VA appraiser. Like they're certified to do it, but they're not like
Employees of.
They're not employed. Yeah.
But the VA itself can go over the top and say, here's your new value, right? And so we've seen, let's see, I got a buddy that had one the other day. It was like appraised for $615. They went back to the VA went over the head of the appraiser, and the VA said $730 or something. Like it was over $100,000 of gain. So you don't have that opportunity with other loan programs. Like, why would you be concerned about appraisals for VA? It's like there's more options here than any other loan program. It's the best one.
So all around, over every aspect we win, it appears the VA is trying to do everything in their power to help that veteran get a home.
Absolutely. Well, one of the things worth mentioning, right, is a lender. VA has homeownership centers throughout the nation with an 800 number, and each part of the country has a regional homeownership center. So ours is in Cleveland.
Yep.
Okay. We can, as loan officers, call Cleveland if we have a question on an appraisal, for instance, or something going on with an appraiser. We can call and literally get a human being that's in Cleveland that answers the phone that is the staff appraiser for our homeownership center.
Can and should.
Yeah.
Can and should. It's part of our job, right?
Exactly. So, we can't really, we can call Fannie Mae on a conventional loan, but then you're just getting the local 800 number. You're not getting somebody on a regional basis that will help work with you. Now, the good news is I haven't had to call the homeownership center in a few years because we haven't had issues, but I have had situations in years past where, you get
I call them all the time.
Do you?
Yeah. Well,
you do more loans. You do more VA loans than I do.
Well, a lot of what I do is the rescue stuff, right?
Yes.
So what I'm doing when I get that rescue deal, where if I don't know that guideline off the top of my head, before I say I can do anything, I say I wouldn't have pre-approved them without knowing the answer to this question, which obviously that other lender didn't do or didn't know the answer.
They didn't
either.
even know to ask the question.
So I'm going to call the VA real quick and get an answer on this.
Yeah.
Right. Or better yet, I'm going to email them and get a response in writing.
Correct.
So that I know I can do this thing, right? Because most of the time you get a rescue deal, and that's how I built my career, is getting second chance deals where somebody says, hey, so-and-so said to call you because my big box lender, who's the number one nationwide VA lender, is denying my loan. Most of the time it's that, either they're wrong right off the bat, I can tell you that, or they never should have pre-approved you, they're right, but it should have never gotten 30 days into contract.
Right.
You never should have gotten to where you're waiting on a clear to close and your lender decides to pull your certificate of eligibility at that point instead of at the pre-approval stage, and it turns out you're actually not eligible for a VA loan. You didn't earn the benefit, because that happens.
Yeah.
It's a huge problem. It's such a problem that the VA changed their guidelines a couple of years ago where they're not letting you order an appraisal anymore until you have that certificate of eligibility, which
should have never been a thing.
It should have never been a thing, but they shouldn't have had to make it. They shouldn't have had to make it a rule, because why would you be that stupid? It's like pre-approving somebody without ever looking at their
income,
their
or
income
assets, or you're pre-approving people without credit.
Yeah.
Well, let's talk about VA eligibility and what determines if a veteran is eligible. I did have a client call me in the last year or two, young man wanting to buy his first house. And he said, well, I'm a veteran. I said, okay. He goes, I want to use my VA benefits. Well, we requested his DD 214, which are his separation papers. And, I don't think he had it. I'm trying to remember. Turns out in his situation, he was never full-time military. He was a reservist, and he had served some active duty, but not enough to qualify.
Yeah, time and training, probably.
Correct. Yep. So there are some situations where you may have somebody, they could have been a reservist for many, many years, but if they don't meet the minimum criteria, they're not considered full-time and get that VA home loan benefit.
Do you remember that name? Because you might want to call him back, because they did change the guidelines recently, post-COVID, because guardsmen and reservists were getting activated for COVID response, and so they changed the guidelines to where you didn't have to necessarily be under federal orders, like in Title 10 orders, where you're basically in support of a war. But if you're activated for
natural disaster.
You're in
basically.
Detroit giving out shots or whatever for 6 months, you could get the and it's not even 6 months. I think it's like 30 days. If you had 30 continuous days of support of anything at this point, because they
Right.
So it didn't just impact the people that were COVID response, but it impacted the people that maybe didn't qualify before, but they had all this time in training. And now all of a sudden that counts where it didn't before. So
Okay.
if originally the answer was no, that might be a yes for them now.
So
Now
are you
the rates
stating
now the
that-
rates are at 7.25?
Are you stating that they were 30 days shy of getting their benefits, and now this timing goes towards that?
Yeah,
Potentially, yeah.
it could in theory. So it can get it can be confusing, right? Because you have to know the right questions to ask, which is why you definitely want certificate of eligibility before you pre-approve somebody,
Yep.
right? Because you might talk to somebody who says, I'm a Marine. I've been a Marine for 5 years. Okay, well that sounds like you have earned a VA benefit. But if you're a Marine reservist who isn't going to say, I'm a Marine reservist right off
No.
the bat, they're going to say, I'm a Marine. So here's my tattoo and look at my stickers on my truck, right? Like, I'm obviously a Marine. Well, if you're 5 years in the reserve and you were never deployed or activated or now put on, response stuff, so again, that changed. But you might not you would not have qualified, right? So the rules are 6 years in the reserve components. So National Guard, Army Reserve, Marine Corps Reserve, Air National Guard. Those individuals would need 6 years of qualifying points, right? So it's in every different branch, it's going to be a different measurement. So it gets a little convoluted.
Is that
And you
1
also-
weekend a month type thing?
Yeah, basically. Like for a National Guard guy, you need 16 points. So you get, where do the points come from? Well, they're retirement points, and you get them for going to your 1 weekend a month, 2 weeks in the summer. So you might have somebody who's, 6 years. All right, great. You did 6 years and got out. And that's very common. That's your initial enlistment is 6 years. But what you might find is when you get the point statement, so you wouldn't ask for a DD-214 in that case, you'd ask for an NGB-22. It's the National Guard Bureau's discharge papers, or maybe it's 23. I flip those two all the time. But if you request that and you find out that they had a year where they didn't get all their points, shoot, you're not going to qualify, right?
You got to go give shots down in Detroit for 6 months.
So you better. So go re-enlist for another 30 days. But it's why it's so important to get the documentation and not take their word for it, because nobody's going to say, oh yeah, I went AWOL for like 6 months. But that stuff happens all the time.
Well, with the client that I had, what his situation was is he went into a special program that he had to test into. It wasn't quite like a Navy SEAL thing, but it was something fairly high up, and he, for some reason, didn't qualify. So they sent him home for 6 months until he was still technically military, but he was like on temporary leave until they got him into whatever the next job or program or training that he was going for. And it was because of this weird 6 month gap in his service record that caused him to not qualify. I think we got him alone, probably did Burl Development or something similar, which is not quite as good, but he was still okay. But this is what gives the VA loan program a bad reputation. It's not the veterans. It's not the loan program. I mean, honestly,
because how many lenders would have given a pre-approval based on the conversation?
It's an ill-qualified loan officer that doesn't know what they're doing. Now, again, we could have a whole show about what is really a mortgage loan officer, and a headset jockey is not a loan officer. They're a person that is trained to read questions on a computer screen and put in an answer. They don't understand the questions they're asking in most cases. They don't understand how that answer impacts the what they're doing. And those are the people that give the VA loan program a bad name.
And they're also not incentivized properly.
Yeah.
Right. So for a typical loan officer, mortgage banker like ourselves, like we don't get paid if a loan doesn't close. But if you're in a call center, you get paid to
hourly.
move it to the next.
Right.
Well, you get an hourly rate plus a little bump if you move a file to the next.
It's like a
person.
conveyor belt
Exactly.
situation.
So you don't actually care where it dies. You got paid.
Right.
So you're incentivized to just get them moving forward, even if they should not be moving forward, and it's ultimately going to end up with some homeless veteran because they're moving from, they got transferred from state to state, and they're on orders and they have to go, and you pre-approved them, and all of a sudden you find out they don't qualify and it's dead, but a whole family is moving across the country. Like, I get particularly fired up about people that screw up VA loans because, quite honestly, there are more, there's just more gravity to what some of these situations are, right? I mean, everybody's home purchase is a big deal, don't get me wrong, but there's a difference between me moving from Howell to Brighton and then having a little delay and having to move in with my mom and dad versus somebody who's coming home from Korea and has nowhere to go.
Right.
And they got stationed in California and they don't know anyone in California.
Right. And the other thing too, for when you talk about the gravity of it, okay, Michigan has, even though, we have, Camp Grayling and we have Selfridge, Michigan itself, most people would go, well, there's not a lot of veterans here because we don't have a base, right? There's other parts of the country that have bases that, there's a very high concentration of veterans, active duty, but that's also false, right? How many veterans are in Michigan? Isn't it like 700,000?
Oh, I don't remember off the top of my head.
It's a huge number.
It's a very comparable percentage as everywhere else in the country. And why that's a great point you bring up is when you're talking about the education piece and loan officers, why should you care, right? Why should you get involved in this? Because I've met loan officers who've never written a VA loan and they've been doing this for 15 years. They have missed opportunities. They've missed an opportunity to do the right thing, I would say. But same for the agents. Like, why would I teach this class, right? And they're like, well, if there was a reason I needed to learn VA, I would come, but I don't need to
I sell $1 million houses. I don't need to know about VA.
Well, 83 or 85% of VA loans are done after service, right? So it's not guys who are in the service and gals that I use guys. I'm an infantry guy. It was all guys, right? But I'm talking about people. So, if you're of the mindset that I don't want to focus on learning and getting good and being the best in my marketplace at working with veterans because I'm not next to Fort Bragg or Fort Huachuca,
right.
You're missing an opportunity because there's the same roughly percentage of the population that's going to qualify for VA, and they buy their homes after they're out of the service.
But years ago, we never even asked the question, are you a veteran? And now we ask the question.
Yeah. The other reason you should be asking that question, and we train realtors to ask that question, is because the probability of you meeting a potential homeowner is about 10% higher. Veterans have a higher home ownership rate than the civilian population by about 10%. So if you're just playing the odds, you should focus more energy talking with the veteran than the non-veteran, right? Because they qualify easier, they have better credentials typically, it's easier to qualify. And there's a lot of opportunity that comes from that. Another thing that I just want to touch on briefly is, the missed opportunities people have with, especially in the markets we've been in for the last 2 years, where it's super competitive, right? Well, a lot of people think you can only have one VA loan.
Oh yeah, that's a great topic.
Or one VA loan at a time. Some people say it's one VA loan. My loan officer that told me to save my benefit, right? That would imply that was a one and done. It's not a one and done. It's a lifetime benefit that doesn't go away. But not only that, it can also apply to those that have a VA loan, qualify to carry 2 loans, and they're looking to move. Why is that a big deal for real estate agents? Because if you're putting out contingent offers because you think you need to free up entitlement when you really don't, you're setting yourself up to fail. You're doing a disservice to your client, and you're wasting your own time, right? If they're in a position where they can have two VA loans, why would you put out a contingent offer if you could go non-contingent, right? So it's little things like that where it's if you just buy into what everybody seems to think is the case, and you don't ask the right questions, you're missing opportunities. And so for the agents that really get involved with learning this stuff, they're more efficient at getting to the next file because they're putting out better offers to start with. They're structuring their deals properly. They're negotiating well and saying, here's, based on the VA guidelines, I'm taking out this section about pest inspections or whatever, things like that, where the common misconception is that because it's the VA, the seller has to pay for certain items. That's just not true. It's a myth that it makes sense where it came from. But basically, it's a blanket response that happened for certain ways that lenders structure their loans. And now the default for the real estate community is to just make it so that that rule applies when it shouldn't. And so they set their client up to fail because you're fighting an uphill battle saying, well, we're coming in VA, and because it's VA, there's cost passed to your seller. Well, that's not true unless that lender is structured in a certain way. So if you don't have that conversation, if you don't know the right questions to ask, you're immediately putting your client in an uphill battle when it should be apples to apples, the same net,
Right.
to the seller and things like that.
You brought up something about that you want to train the lenders, the loan officers out there, and a lot of these fast food phone jockeys running the call centers and that. Here in like Livingston County, we've got some very seasoned, well-qualified loan officers that are very, very creative and understand their guidelines on rural development, conventional, and all that. And I truly believe, because myself need to expand my knowledge of the VA and all the creativity that they offer to structure these loans. So this has been absolutely wonderful, kind of eye-opening for me.
And we could probably talk about this for hours.
Yeah,
For sure.
But
Yeah.
but Eric, we got to wrap up the show here. But how would one seek you out for the expert in understanding where you can help point people in the right direction? How can they get a hold of you?
Well, myvaguide.com will take you to my website. I'm Eric.Ensley at USA-mortgage.com. Find me on Facebook. I do a lot on Facebook. We have loan officer and real estate communities on Facebook. I have veteran communities on Facebook, groups we run. Ultimately, like I'm a resource. I want to be your resource, right? You just mentioned we have a lot of great talent in Livingston County. We absolutely do. And I'm happy to take calls from those loan officers who I called 2 different loan officers yesterday for a new construction question, right? Like that's not my wheelhouse. I'm going to ask the right people the questions. If you have VA questions, I'm your guy. Give me a call. I'm happy to help. If you're a real estate agent and you're working with a big box lender that's having trouble, call me. I don't need to take the deal. I want you to win. I'm going to help you do that.
Right. Any closing words, Danielle?
Thank you so much, Eric.
Thanks for having me.
Thrilled to have you on the team. We are looking forward to continuing to expand VA in our market and in other parts of the country. So
And maybe have you on the show. We'll just start doing all the training stuff right here because I want to learn more. But anyway, thanks for coming on. That was Danielle Boote. My name is Victor Bals, and that was a great show. And we'll see you next time here on A Smarter Way Home.
This world better